We were talking about the quarterly operational updates that have been put out by several companies. Yesterday it was DMart. Today you woken up with updates as far as HDFC Bank as well as Marico go. The last earnings season, the big theme was inflation and margins being squeezed out. What is Marico saying for the third quarter? My colleague Vinnii gets you the highlights. Good morning, Vinnii.
Marico has reported its Q2 operational update, and now in terms of the update, the revenue growth is expected in the quarters expected to be in double digit, but the volumes on the other hand are expected to be flat, mainly owing to the weaker consumption sentiment and the strong base in the last quarter. So obviously volumes are expected to be flat this time around. Overall, one thing that the company has highlighted, now the company has a rural exposure of around 30 to 35%, and what the company did highlight that the rural demand was also sluggish in quarter 3. Optically it may seem high because of the lower base last time, but the rural demand is a bit sluggish in this quarter. That's one of the main highlights that we should be keeping an eye out on. Other than that, segment wise, Parachute coconut oil had remained it's a muted quarter. Last time it was a very, very high base, so obviously because there was a higher in-home consumption as well. So this time Parachute coconut oil is muted. What we can expect is a muted quarter for the company. Value-added hair oil is also softer growth in terms of value. Saffola, overall, the Saffola brand is expected to be in high teens in terms of value, but edible oil volumes have dropped significantly is what the company has highlighted due to in-home consumptions were much higher in the base quarter. International business is expected to deliver high teens constant currency growth, as well as in terms of margins. Yes, margins are going to be improving sequentially, the gross margins on a quarter-on-quarter basis, but year-on-year basis gross margins will still remain lower. We are seeing the raw material prices start correcting now, so surely keeping focus on that. But as of now, yes, sequentially improvement YOY will continue to be under pressure. Operating margins are expected to be somewhere similar to the preceding quarter. That's around 17 to 18% is what we can expect in terms of EBITDA margins of the company. So let's watch out for overall Marico's Q3 performance, margins in terms of that, as well as demand trends, what we can see shaping up in quarter 3 numbers.